Traders, Kazabini coming to you from theclosingprint.com on February 17th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, including the international indices, with the exception of the Nikkei. The FANG stocks were also higher, and we did see the bond stock ratio, HYG and junk, all bullish to start this week, with the Dow Composite in a bullish trend, S&P 1500 on a buy signal, it's bullish, and the XII ARC Institutional Index is trending. Tick and Tick Q, however, are trending a bit lower as of the close on Friday. NAMO and NIMO are trying to change to a bullish cycle. They're currently at the bottom of a bearish cycle to start the week. However, NYHL, the number of stocks making new highs versus new lows last week, did hit a new high and continues in a bullish cycle. NYAD, New York Stock Exchange Advanced Decline, is above the red zone and continues to move higher. The S&P Equal Weight Index is showing the potential for a double top, so we have to watch that to start the week. Put-call ratio is just below the neutral zone at 0.83. We did see VIX trailing off last week. The 60-minute is in a bullish cycle with the VIX at 1368 on the close on Friday. Bullish percent is rising slightly, and skew is neutral at 132. US dollar is showing signs of a potential triple top. It did print a doji on Friday. In addition, bonds are all taking a breather, starting to ease a little bit at highs as the 10-year yield tries to bounce at the 2019 lows. Gold is range-bound, but it is in a bullish trend. Copper did bounce as well, making higher highs and higher lows. It's in a bullish trend, backing and filling along the way. We want to see that moving higher if you're bullish and lower if you're bearish. West Texas crude did see a bearish drop over the preceding 5 weeks. Last week was the first week where we saw a bounce and a potential for a move back into its range to start the week. That would be bullish for equities if that continues to move higher. The heat map has started to improve. We see strength in most sectors. International markets are improving as well, with EEM moving higher. South Korea, China fared the best last week, with the USMCA, of course, behind us. Canada and Mexico are also improving. We'll look at some IBD 50 names this week, showing relative strength and some MarketSmith Growth 250, in addition to the top 20 volume percent gainers last week in green. Bukowski is showing 505 green, with his CPI signals green since February the 4th, moving from 21.9% in the preceding week's analysis to 65.7% this past week. That's bullish, with 12 bearish patterns, 23 bullish patterns, and 401 patterns waiting for breakout. Bottom line, again, we're cautiously bullish this week to slightly neutral. We want to see the markets start to trend before we get very aggressive. The XII ARC Institutional Index, 75 stocks most commonly held in institutions' core portfolios, tells us what institutions are doing. They've been buying. We can see that the trend is resuming. We'd like to see this also on the major indices like the S&P 500 and the NASDAQ 100. The XII stays inside of standard deviation 1, the dark area, and standard deviation 2. That's what we saw back in most of the trend since the October low, through the recent highs and consolidation of recent gains from 1566. We're now trending once again. So we're looking for the same thing on the S&P 500, in this case the spiders, for the trend to resume and for price action to remain above the bullish 9 EMA near the blue arrow and push off of this rising trend line that we have at point B from 332.95 up to those pivot lows that we saw on Thursday. We're looking for this trend to start developing over the coming weeks so that we can get more aggressive going forward. Always a potential that we can come back and test the 9 EMA or the 21-day, the red line down at 331.12. So be aware of that as we start the week ahead. Growth stocks, the IBD 50, all of the NASDAQ related 100 stocks continue to outperform. As you can see, this line, this ratio between growth and value continues to push higher. Value in the lower panel, you can see, is pretty much flat in a range, whereas growth continues to climb away from its 20-period moving average. So we're watching for this to continue this week, especially if we're interested in trading the big cap FANG stocks. With Nvidia gapping up on earnings, Google moving higher, Amazon showing potential signs for following through, Facebook as well, Apple seeing a small reduction in Warren Buffett's position. It's his number one position going forward, and of course Netflix to round out the list. So it should be no surprise that the past 2 weeks have been very large bullish candles on the NASDAQ 100 weekly chart. Continues to accelerate away from the moving averages, potential for a pullback at any moment. So that's why we're a little bit cautiously optimistic going into week. Volume shows institutions have been buying, and MACD shows that it will take more than a couple of days for this weekly chart to show slowing momentum. Even small caps fared well last week, following through for the past 2 weeks, back up towards these highs, RSIs above 50 and rising, and MACD's leveled off. It looks like it could move a bit higher. Last week did produce a bullish candle on lower than average volume. Looking for IWM to continue higher this week as well. One of the caveats, obviously, is the S&P equal weight index, where no stock is overweighted. We do have the potential for a double top, though price action shows these wicks at the bottom of these candles, showing that buyers did step up at the low of the day on Thursday and Friday. So while we did pause at highs, the moving averages are climbing, and we have yet to see overbought conditions like we had back in September, December, and in January. So overall, this looks more bullish than bearish, as the S&P number of stocks trading above their 50-period moving average did taper off a little bit last week, which gives us the potential to move back up towards the 90 zone before getting overheated. The S&P 1500 also remains on a buy signal, continues to trend. Histogram shows strength in this group. This is the S&P 500, S&P Midcap 400, S&P Small Cap 600, producing green sticks for the past 2 weeks, trading above the 21-day and rising, with Bollinger Bands beginning to open up top and bottom, which is telling us to look for a fast move in the weeks ahead. And breaking down the breadth in these three groups, the advanced decline percent for the S&P 500 in the top panel, mid caps in the middle, and small caps in the lower panel, we can see higher highs and higher lows with the S&P 500 clearly outperforming. We'd like to see mid caps get with the program as well as small caps, so we're looking for breadth to improve as price action moves higher. New York Stock Exchange number of new highs versus new lows also made a new high last week. The cycle is clearly bullish. Black line continues to climb, and we see green elder sticks for the past 2 weeks. As the New York Stock Exchange composite of 2,000 stocks tries to make a new high, we're currently faced with a double top. So any breakout this week would lead to all-time highs. The S&P 500 will be starting off with a green signal for VIX presently, rising and green, which is telling us to look for higher highs and higher lows on this 60-minute time frame. This is happening while VIX daily, of course, has moved away from the green zone, continues to drop over the last 2 weeks, 3 weeks, indicating a bullish trend is likely as long as we continue to move lower and fear continues to dissipate. In addition, as skew continues to drop, this is telling us that institutions are not interested in hedging. If we're above 135 and trending higher highs and higher lows, that would be a different story. That would tell us to be more concerned. Presently, we're making a series of lower highs and lower lows as the S&P 500 in the lower panel continues to climb, producing green and blue elder sticks, finishing on a blue stick on Friday. So for the time being, this looks pretty good and bullish for equities short term. We also see cycles in the industrials. As we can see on this daily chart, the cycle is bullish, coming through the zero line after dipping 2 weeks ago, continues to push higher. We're not near the red zone, so this is telling us that we could see more upside and still not be overbought in the next couple of weeks. We see the same thing in the cycle for the S&P 500. While the NASDAQ 100 is getting near the red zone, this is a arbitrary shaded area. It just gives me an idea when we start to look for overbought territory, considering how the FANG stocks have been performing of late. In addition, we see the same thing on the Wilshire 5000, a broad measure of market participation. The cycle is also moving higher on this index, with plenty of room to the upside before we get overbought. The bond stock ratio is also trending bullish. As we can see, the red line is dropping. That's telling us to be focused on equities versus bonds as they're being favored at the present time. We saw the 2016-2017 period where this moving average continued to drop. We're starting to see that now with the 65 period moving average starting to drop as well. That would lead us to a bullish trend in equities. In addition, junk bonds and high yield corporate debt continue to point to a bullish equity situation as these lead the markets in either direction. We can see where weakness back in 2018 was led by junk bonds and high yield corporate debt. Now we have the opposite. We have a series of higher highs and higher lows on this weekly time frame, giving us a bullish indication as investors chase these higher yields while the Fed continues to lower rates. These are considered a more risky investment and therefore a risk-on indicator when they're moving higher. We're also starting to see a potential for the 10-year yield to bounce and continue moving higher in the weeks ahead as we bounce at the 2019 lows and the S&P 500 continues to move higher. This is the AGG, Barclays Aggregate Bond Fund. This is what bond traders use as their benchmark. We did see a breakout several weeks ago. MACD has crossed and we do have stochastic overbought. So there's a potential that we could hang out here for a few more weeks, come back and test the moving averages or continue higher. So we'll have to watch bonds in the short term. If bonds start to take off to the upside, that would be an indication of the fear trade continuing into the weeks ahead. This was happening as the TLT, the 20-year, tried to break out over the last few weeks, continued to see selling up at the highs. I wouldn't be surprised to see this pull back in somewhat in the short term. MACD's turning back up. 3 weeks in a row, buyers at the lows. All of this is happening while the US dollar continues to strengthen. Again, the safety trade as the dollar continues to push higher. Potential for a triple top. RSI is showing muscle. We did see a doji on Friday. Having broken out of this descending wedge 2 weeks ago, there's a lot of strength in the US dollar. That'll put some resistance on commodities like gold, which is priced in US dollars. We're trying to get above these pivot highs. Again, the safety trade continues to see inflows into gold. As we look at this bullish trend and range-bound condition, if we get above these areas here, like we saw 2 weeks ago, then I would expect to see a test of the 1613 high in the short term. If the dollar does continue to move higher, something's got to give. Though with both of these, the US dollar and gold moving higher, that's a reflection of the safety trade continuing to find buyers. So we'll have to monitor this closely in the short term. In addition to what we saw in strength with copper over the last couple of weeks, we did get this double bottom bounce that we're looking for, a series of higher highs and higher lows as we push back up towards the top of this range. That would be bullish for construction, building supply, and related builders over the next few weeks as we move higher. So keep an eye on copper. We'd like to see this continue along its path back up to recent highs like we saw on the monthly chart that we've pointed out in the past. The 2009 reversal, copper led several months before the March 9th, 2009 rally in the markets, and again after the presidential election when we moved higher. A descending channel pattern, looking for a break to the upside if you're bullish those construction related industry groups going forward. And finally, we saw West Texas crude and Brent moving higher last week in this big sideways range we've seen all of 2019 into 2020. We just got a bounce last week after 5 weeks of moving lower, 25% off the highs in this recent pullback. We're looking for this to continue. We did start a position in USO last week, looking for this to move a bit higher back to the 21-day in the short term at the least, which would be bullish for equities as there's a positive and bullish correlation with crude and equities. We're also looking for the sector heat map to continue this improvement that we've seen over the last few weeks after being crimson red at the end of January. We read this from left to right every Friday. This is updated. We can see that the sectors from materials down through transports, real estate, technology, and telecom services, in addition to utilities, all of these were improving and turned green last week, in addition to what we saw in the international markets, which have been improving as well, with China, South Korea doing well, in addition to Mexico and Canada after the USMCA. In addition, the sectors that are improving, we continue to see real estate rally. Technology is trading at 52-week highs, in addition to the communications sector. XLU breaking out, and consumer discretionary. If you're bullish the economy, you want to see consumer discretionary moving higher, and we also see consumer staples improving as well. Industrials look pretty good. They're above the 20-day. Most of these sectors are above their 20 and 50-day moving average, with the exception of transports, which we need to see improve. If you're bullish the economy, transports are a vital part, and we also want to see energy continue to move higher as well. Here is the IBD 50. Once again, we're looking for stocks that have just pushed off the 21-day moving average, not too far extended like we do have on Adobe. While Adobe is very bullish and showing signs that institutions have been picking up shares, really not interested in chasing it. I'd like to see a pullback. It is trending above the 9 EMA, so anytime it comes back to the 9 EMA will most likely be a buy point like we've seen since the October lows. Every time this comes back to the 9 EMA or the 21-day is a buying opportunity once we see a follow-through day. While AMD trades at the highs, semiconductors did very well last week. Alibaba, of course, a nice pullback to the 9 EMA and 21-day. MACD's above its signal line. We also saw RSI remain above 50, so this might be a nice follow-through this week to start. While stocks like BlackRock finally giving us a pullback for an entry, Mikey was into this one once it moved back through the 200 period moving average. Just continues higher. If we get a buy signal at the 9 EMA, we'd look for buyers to step up, volume to increase again, and for price action to continue to move above the 9 EMA as RSI continues to show muscle. We also saw some potential in some of the pharmaceutical stocks last week, those fading back to the 9 and 21-day, looking for a bounce, a bullish day like we saw here in early January, where price action moved above the 9 EMA. We got several bullish candles. That would be what we're looking for again to start Tuesday, Wednesday trading. If we do see a bullish candle like we had back here in the first week of January, that would be a buy signal. RSI is rising and MACD is above its signal line. We'd just like to see it on the R-ball list as well as trading above average by the close on Tuesday. Sector strength in real estate also continues to show up on stocks like CB Richard Ellis. Bouncing at the 21-day, buyers stepped up, producing a hanging man candle or hammer at the 9 EMA close on Wednesday into Thursday, looking for a follow-through in some of these real estate stocks this week as well. While Chinese education and tutoring stocks, EDU and TAL, continue to push higher, looking for a double top breakout. As volume increases, MACD's crossed and rising, showing momentum is with the bulls. In addition to what we saw in FISV last week, this has got a nice trend. The 21 day is what I'm looking at here. RSI is above 50, looking for a follow-through day into Tuesday, Wednesday, Thursday would be nice. That would help MACD get back above its signal line. We'd just like to see that on above average volume. While the same goes for Franco-Nevada, gold, which continues to trend higher along with gold, remember, is in a sideways range for the last month as the dollar and gold continue to be the safety trade of choice, it appears, with some people looking at bonds as well. If this continues to move higher, I'd expect to see gold breaking and testing those recent highs like we just pointed out a few minutes ago. Fortinet also consolidating along the 21 day, closed above the 9 EMA. Thursday, Friday, we're looking for this to follow through. RSI is above 50, looking for MACD to turn and for volume to continue accelerating with price remaining above average as price action lifts off for this company from the Security and Networking Functions Industry Group, which reported decent earnings the beginning of February of 29%. We can see that sales and earnings continue to increase in a positive direction as it outperforms its industry group. Google was also consolidating last week, moving sideways, looking forward to push off the 9 EMA. RSI is above 50. We do have MACD above its signal line and rising, and volume is showing that institutions have been pretty active since earnings. Stocks from this group, Global Payments, continue to show strength. We're looking for this stock to continue higher along with PayPal and other names, MasterCard, Visa, etc. As economies around the world start to improve, so will their sales and earnings. Chip stocks like Intel, KLA-10 Core, LRCX, Applied Materials, NVIDIA all did well last week off of NVIDIA earnings, which surprised many from the bearish camp. Big cup and handle pattern potentially trading on the weekly time frame, looking for a follow-through, maybe a little consolidation this week at current highs. As technology stocks continue to outperform, trading at 52-week highs, while stocks like L3 Harris continue their bullish trend along the 9 EMA. This one most likely will follow through this week as well. MACD's flat. It'll turn up as a function of price as the stock continues trending along the 9 and 21 day, while stocks from the consumer discretionary group like Lulu continued trending higher. Shopify also did well, gapping up on earnings, holding the gap. Ulta, also another stock that's performing well, continues to trend into the gap. Look for Ulta to continue higher, while stocks like Microsoft pull back to the 9 EMA. We're watching how Mr. Softy holds this level, in addition to Netflix trending along its 9 and 21 day. I like pullbacks that get bought like we saw here. On Monday, as we touched the 9 EMA, we followed through and then continued higher to finish off the week, while ServiceNow is trending, looking for any pullbacks to the 9 EMA, again, with follow-through days as your entry. A test of the 9 EMA, buyers keep stepping up. That's telling you that institutions are still very active. Software stocks, in addition to Microsoft, Paycom continues to follow through. This is a nice little setup. It's right at the 21 day. Looking for a trend to continue here, along with human resource management type stocks like Paylocity Holdings, which hails from the human resources software solutions industry group for medium-sized companies in the cloud. Planet Fitness has been on our watch list over the last several weeks, continues its bullish trend, really accelerating on Friday. So if you took profits into strength, congratulations. This is probably just going to continue higher. Look at MACD, RSI showing muscle. ResMed also trending. Pullbacks to the 90 MA is what I'm interested in. RSI staying above 50 and MACD above its signal line and rising, while volume shows that institutions are active. Square also shows potential, another name from the payment processing group. Pullbacks to the 90 MA keep getting bought, with price action closing in the top of the daily range as a confirmation. Spirit Realty, we've talked about this several times, holding the 90 MA, buy the next day, follow through, and just keep the trend. Pullbacks to the 21 day, same idea, bullish day on Thursday, follow through Friday. Look for a follow through day on Tuesday and Wednesday to start the week. StoneCo also following through. Look for it to get back above the 21 day, maybe a follow through day on Tuesday and Wednesday. T. Rowe Price, we talked about this one last week. The reasons why this stock might continue to move higher. Holding the 90 MA, look for a follow through day on Tuesday. Toro pushing above the 21 day, look for this to break out above this triple top situation. MACD's turning and crossing. We just need to see more volume. TradeWeb relative strength just broke out, testing 52-week highs in the short term. Looking for a little flag, perhaps on Tuesday, Wednesday, and maybe a follow through as RSI shows strength and MACD is above its signal line and rising in addition to above average volume. Viva Systems, there was a few firms that bought this stock last week. We saw decent volume, price action following through. 90 MA is trending now, as well as the 21 day, while RSI suggests higher prices, MACD is above its signal line, and volume increased on Friday. Veritex is trending. Look for the 90 MA to hold price action. Look for a bullish day on Tuesday and Wednesday. XP, we're looking for a follow through, a breakout of this range in the short term. And Zito, which did meet all of our targets last week on Wednesday. Thursday, a little bit of selling back to the 90 MA. Watch how this holds. Maybe we get a follow through to start the week. Investors Business Daily also had some interesting articles on what Warren Buffett has been doing, his buys and sells for Q4. We can see some of his recent buys: Kroger, Biogen, Apple, Wells Fargo, and Berkshire Hathaway. Of course, with Apple, he trimmed a little bit of his position, but it's still the number one position in his portfolio. We saw positions increase in Oxy and Occidental Petroleum and RH, formerly Restoration Hardware. Okay, so be sure to check that out this weekend. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on February 17th, 2020 with your weekend video newsletter. Make sure you check out some of the names down here under the MarketSmith heading, as well as the stocks in green that showed above average volume last week. You can see Virgin Galactic here, SPCE, along with Vico, and a few other names like GoDaddy that might see some follow through as well. Remember, Bukowski is showing 401 patterns waiting for breakout. We are cautiously bullish this week to neutral, so we'll want to see price action continuing higher. As always, we'll send out a watch list later tonight around 11:30 and 8:30 on the East Coast. Be sure to look for that in your inbox. Otherwise, I hope this helps. Take care, and we'll talk to you soon.